Welcome to America's Commercial Real Estate Show, your source for intel, forecasts, and strategies. Hello, I'm Michael Bull. Thanks for being with us. Today, we're going to talk about commercial real estate. We're going to talk about financing. We're going to talk about lending. We're going to talk about life insurance companies. Please welcome my guests. We have Tom Fink, Senior VP, Managing Director with Trepp, and he's on the phone. Tom, thanks for joining us.
Michael, my pleasure.
We also have Greg Michaud. He is Managing Director with Voya Investment Management. Michaud. Greg Michaud, thanks for being with us.
I'm glad to be here.
So you guys do a report. This is the Commercial CRE Finance Council in Trepp, and you guys do a insurance company investment performance survey. And I think this is an important survey for really everyone involved in commercial real estate, because when you look at the life insurance companies investing in commercial real estate, hey, we might want to pay attention to what's going on there, right?
Yeah.
So tell us about this report.
Yeah, so it's Tom can fill in the blanks on the exact number, but I think we've got about 70% of the universe of life insurance companies that contribute to the survey, and it's a really in-depth survey. It really bores down to really good detail that you'll get nowhere else in any of the surveys. So it can be a good harbinger to see where life insurance companies are lending, LTVs, debt coverage ratios, debt yields, property types, regions of the country, things like that. So it's a good study to show where we're lending, how we're lending, and who we're lending to. So I think it's an excellent survey in that regard.
Yeah, and Tom, why is it important to commercial real estate people in general?
Well, I think, there are a couple of sources of capital. Long-term capital is provided either by life insurance companies or basically the CMBS market. And we believe that life insurance companies are uniquely positioned to take long-term exposure to real estate. And through the financial crisis into the recovery, it's important for them to be able to get the story out to the regulators, to the people that they have to deal with, that performance is good. It's actually excellent. And then the individual participants to the survey get to see how they're doing versus their peers in the industry, so that it gives them measurement around the types of loans they're originating versus the industry, the types of credit criteria they're applying versus the industry, allows them to see how they're doing and to see if the results match up with the strategy they entered the year with.
Right. And, I'm invested in my life insurance company, and I want to know that's safe money. That is safe money. So how are allocations for life companies trending for their commercial real estate holdings?
Yeah, no, it's commercial, commercial real estate is, they do a thing called SAA work, which is strategic asset allocation work. And they determine, where you're going to invest money as a life insurance company. And as we were talking before, it's mostly all fixed income assets. We're not doing stock or anything like that. So it's private placements, it's high yield bonds, emerging market bonds, CMOBs, which are the residential derivative type things, RMBS, CMBS. And so in the model, they'll throw all this in the model, performance, yields, they'll look at the forward curve, things like that, and determine what our allocation is. And what you're seeing an increase in allocations to commercial real estate by most life companies, primarily to what Tom just referred to, is because we made it through the crisis relatively well. The survey actually was a good way to show the regulators and everybody in our companies, hey, this is a good asset class to be in the long term, because it's a great asset to liability match for a life company, probably one of the best ones, especially if you have long dated liabilities. And so they throw it in this model and it comes out, and I think you're starting to see the average life company is going to be 12 to 15% of their investment assets in commercial real estate, and that might grow even to 17, 18%.
Okay, and there's a very small amount of losses, right, for these life insurance companies, Tom?
It's so small, you could almost call it a rounding error. Life insurance companies, particularly today, are making first mortgage loans on good properties, and the performance reflects that.
So what type of loan to value are you seeing in the portfolios, and what type of loan to values are you seeing on new loans?
What we're seeing is that new loans are, a little bit higher on LTV because they're being made at today's market value. The average is still under 60%. And what we've been seeing on the flip side of that is that for existing loans, the LTV is continuing to go down for two reasons. One is amortization, which insurance companies still get, but two is property values continue to rise. And so the effective LTV on the seasoned portfolio continues to decline.
And you guys are still seeing, I guess like we are as brokers, a lot of people interested in commercial real estate.
Yeah, no, you're seeing there's still a big demand. EB5 has probably been the biggest new entrant into the market, which is the visa program for foreigners. You're seeing a lot of that money come into the U.S. And you had some fixes to FIRPTA, which is the real estate tax. So you're seeing more foreign money come in. But in general, people like we talked about crowdfunding before. I mean, people want to find ways to get into commercial real estate, and because it's been a good asset through the cycle. And so I think you're going to continue to see money flow into this market.
Yeah. And Tom, what's your opinion on what do you see as related to crowdfunding and how that business is coming along for commercial real estate?
I honestly think it's still a solution looking for a problem. We see a lot of single-family, larger home properties show up as properties searching for crowdfunding. We've heard that people are trying to partner up with an insurance company to use crowdfunding to essentially split the loans into two pieces, with the least risky part being sold to the crowdfunding market and the riskier tail being retained by the insurance company. But I don't think it has not delivered the value or the volumes or had the impact on the market that a lot of the pioneers in the business were hoping it would.
Yeah. Yeah. No, I'd add to that. I think it's a tough market to be in the way their model was set up. And it doesn't work well with commercial real estate if you've got a as a broker, you've got a deal going on. You can't wait for 80 people to all chip in money to get that loan for your borrower. I'll be curious to see. I think some people will figure out the model. I don't think everybody will. You've already seen guys fall out of the market, and I think we'll have to see how it goes through a cycle. I'm not sure how. When you have a loan with 80 investors, how that actually works out if the loan ever goes bad, or 80 investors in a piece of real estate, how they decide how they're going to re-tenant the building. Yeah. So it'll be an interesting to see how it goes through the cycle.
Yeah. Yeah.
Well, Greg, I think we actually have seen an example of that. They were called tenant in common structures.
Yep, that's right. That's right. You're right.
They did not work well in the downturn.
Yeah, and as a lender, life companies did not lend to the TICs for the most part, because we don't like syndicated TIC deals, because when you do a loan as a life company, you don't want to lose money. You want to make sure that you're dealing with one person, and if that property needs to be re-tenanted, you don't need to go through 30 people voting on a deal. So I agree with Tom. I think that's going to be that could be the pitfall of that platform.
Yeah, well, it's interesting because it sure is a nice platform for ordinary people that maybe have small amounts of money to invest in nice commercial real estate projects.
Yeah, and that's why I said it's people want to figure out ways to get in there. And look, I've been on a lot of the web pages. They give you a great dashboard. You can see where your money's being invested. It's not like putting money in a REIT. You can kind of see where your money's going. And maybe there's going to be a model down the road to allow the small investors to do it. I'm just not sure. If it's this model, I don't think it's going to look at this way in 5 years.
Yeah. Well, we're going to take a short break, and when we get back, I want to ask you guys some more about life insurance loans and what are some great properties, some great projects that might work well for life insurance, and what some of the sample terms and LTVs and rates might be today. And speaking of commercial real estate, if you've got a project and you want an incredible video of your new project, visit BarnesCreativeStudios.com. They did some videos for our website at bullrealty.com if you want to see some examples on our homepage. Pretty incredible. Well, stay with us. We'll have more on life insurance loans, on finance, on commercial real estate. I'm Michael Bull. This is America's Commercial Real Estate Show.